Hey, Carl, you turn this jobs report sideways, shake it up and down, and you're still left with a really strong jobs report. That has very few holes in it or weaknesses, with the only question being, can this strong momentum continue? Here's the numbers. Carl told you 250. He didn't tell you the expectation was 188. ADP had a stronger number. So did my jobs model, for what it's worth. Average hourly wages, that's where all the talk is. I want to talk more about that in a second, but up 0.2%. Unemployment rate unchanged. A lot of people came into the workforce. A lot of people found jobs. Labor force participation rate ticking up to 62.9% of the population. That's 0.2 extra. Now take a look at this chart. 3.1% year over year. First time we've topped that 3% mark since going back to 2009. And the question is how the Fed is going to look at it. RSM says, quote, the primary narrative with respect to labor market dynamics over the next year will be wage growth and the ability of firms to manage an historically tight labor market amidst a strong U.S. economy. So let's look at where the jobs are. And what you see there is good, what we call diffusion. That means a lot of industries had good jobs growth here, 44,000 in education, health services. Leisure hospitality, that was the one place I did see a little bit of a snapback from the hurricane in September, adding jobs in October, but not seeing a whole lot of fall off in October from Hurricane Michael. Manufacturing, very strong again. Construction doing well. Again, maybe a little bit of a hurricane effect there, but otherwise, transportation, warehousing, 25,000. Over at Oxford, they're saying these encouraging readings suggest very little slack left in the labor market. I think that's how the Fed is looking at it. It's going to be a concern for them. How low does it let the unemployment rate go before beginning to more seriously lean back against this momentum? Well, here's what the market says about that. 76% probability for a rate hike in December. The first quarter point hike of 2019 is now estimated to come in March. And that second one for September, we haven't really been over the 50% mark as we are right now. That number is actually 49.8. We rounded up for simplicity. The Fed gets one more jobs report before December. In the absence of, I would say, pronounced weakness, that fourth rate hike is a done deal, Morgan.